we're going to see the liquidity of stable coins like Frax and all the other stable coins. I think collectively those USD pegged stable coins are going to be worth $1 trillion, in this coming bull run.
Ooh, coming bull run.
Exciting.
We like the sound of that. GM, everybody. Welcome to Flywheel, your number one source for everything Frax, DeFi, and everything in between. If you want to know what's going on in the world on chain, well, you come to the right place. This is DeFi Dave here with Kapital K, and we are here to help you harness the power of the flywheel. And speaking of helping people harness the power of the flywheel, we have on one of the OGs in DeFi. He's my dad. He's your dad. He's DeFiDad.
The master educator.
Yeah, I love this episode because we start off with Frax and then we just chunk up towards stablecoins and all of DeFi. And at the end of the episode, you're like, damn, DeFiDad knows a lot of stuff. And damn, like DeFiDad really cares. And I think that's what's most important. What are your thoughts?
I think he's also a genuinely curious person. Yeah, I think that's why he's like such a good educator, because he, asks such good questions. And I really miss his tutorial videos.
I know.
I remember back then when we was like, early DeFi days, I was just always searching protocol name plus DeFiDad on YouTube.
Don't you love that? Your friendly neighborhood internet dad here to help you out. And he's here to help all of us out on this episode. And if you don't want to miss any help from your friends at Flywheel, make sure you hit that bell button. You go subscribe right now. Leave us a comment. Let us know what you think. Give us a like. Every little bit helps. Make sure you subscribe to flywheeldefi.com for all the latest updates and insights and alpha about Frax and DeFi. Make sure you follow us on all our socials on Twitter, Telegram, and TikTok. Make sure you follow me, yours truly, DeFi Dave, on Twitter at DeFiDave22.
Follow me at 0xcapital_K.
And let's get the flywheel spinning.
ਦਿਲ ਪਰਦੇਸੀ ਨੂੰ ਤੈਨੂੰ ਨਿਤ ਦਾ ਰੋਣਾ ਪੈ ਜਾਊਗਾ ਨਾਲ ਰੰਜੇਟੇ ਜੋਗੀ ਦੇ ਤੈਨੂੰ ਜੋਗਣ ਹੋਣਾ ਪੈ ਜਾਊਗਾ ਇਸ਼ਕ ਦੇ ਲਿਆ ਜ਼ਖਮਾਂ ਦੇ ਖੁਦ ਹੱਸ ਕੇ ਮੂੰਹ ਸੀ ਲਾਂਗੀ ਜੇ ਯਾਰ ਮੇਰਾ ਮੈਨੂੰ ਜ਼ਹਿਰ ਦੇ ਮੈਂ ਘਟ ਘਟ ਕਰਕੇ ਪੀ ਲਾਂਗੀ
Do you hold ETH but don't know what to do with it? Want to earn those juicy liquid staking derivative yields but don't know where to start? Well, FrxETH is there for you. FrxETH is Frax's native LSD solution, allowing you to earn boosted yields in multiple ways on your ETH. If you want to get started, go to app.frax.finance and turn your ETH into FrxETH today. All right, everyone, let's get this one started. Another episode of Flywheel DeFi. I'm your host, DeFi Dave, here with Kapital K. And this time around, we have on the DeFi super user and educator at 4RC Capital. He's the host of the Edge podcast. It is none other than the legendary DeFiDad. DeFiDad, you've been in DeFi as long as I can remember, since I remember seeing your videos early on in DeFi Summer pop up on the timeline, and just like the wholesome dad, like looking out for you, looking out for all like the DGen sons on the timeline. So it's great to have you on. I've been following you since then and seeing your journey all around the space. And, I feel like where we both share commonalities, like how much we all truly care about the growth of DeFi and crypto as a whole, and how long-term minded we all are in the space. So DeFiDad, great to have you on. Thank you for joining us.
Yeah, Dave, Kit, thanks for having me on. And yeah, that absolutely captures, I think, my philosophy and part of the reason we all get along. I really admire what you guys are doing with the Flywheel DeFi pod and the fact that you're a part of the Frax community, that's clearly like a greater part of your focus, like could not be more aligned on that. Frax is for me one of the most promising, if not the most promising protocols and communities in DeFi. So anyways, guys, thanks for having me on.
Yeah, we couldn't agree more. Like whether it's Frax, Flywheel, you at the Edge Pod, and also for our capital, like we're all positive sum. Like, we all talk at Frax being positive sum. We all grow together. And so, we all share that philosophy. So, but to get started, go ahead.
One quick thing on that. I think a part of that, like positive sum thinking, I mean, that is a trickle down from Sam, right? From Sam Kazemian, in case anyone lives under a rock and wouldn't know Sam as the founder of Frax. So it's really impressive how that continues to carry forward. Like, he is fully dedicated to Frax. He seems to surround himself with, core contributors, anyone who wants to, be a part of Frax that has a very similar mindset. And it is very refreshing. We actually did, this was back in like February, I want to say, or March. We did our third episode of the Edge podcast with him. And I can't remember the exact title, but it was something like The Positive Sum World of Frax, or The Positive Sum World of Sam Kazemian. So anyways, we're going to get into this today. There's a lot to unpack here about, like, why does Frax continue to grow and innovate and not succumb to, I think, the pitfalls of other DeFi protocols, other crypto teams.
We can get into that right now. Like, why do you think that's the case?
Okay, so I think that Frax, I was thinking about this today, kind of like thinking about like, oh, what should we talk about? And one of the things that I haven't talked about much on the Edge podcast is that I think that Frax has struck a balance between building for the average new user in DeFi without over focusing all of the time and resources on building for them, because those users are not very loyal. They come into the space, they're wide-eyed, they heard a friend made X amount of money staking or farming, whatever. And some of those folks stick around, but you're still dealing with the top of the funnel in DeFi. Frax doesn't just focus on that user. It does tend to build for the more advanced users that are already here. So that's cool. But then it really focuses on how can we continue to build products that layer on top of all of the other Frax products. And so, I think there's an alternative universe where Frax is building all these products and it's too much. It's just trying to do too much at once, which truly was like, that was my criticism early on. I was watching Frax and just thinking like, holy cow, they're building an index. Now they're going to do lending. Like, now they're doing borrowing. Like, there's just so much going on here. But the thing that made it work, I think the glue that holds it all together, is every single product has been built for an existing user base in Frax that is like excited, enthusiastic, and urgent to use it. And it's just a brilliant strategy. So that for me has been the root of success. Like, even the Frax stablecoin, that's the hardest one to get started. That was the flywheel of all the flywheels that was hard to get started. Yeah. But beyond that now, like the Frax staking, oh my God, like that Frax staking that has gone live however long ago.
It was last year at this time.
Yeah. You have this existing user base that, already is loving Frax and using it in all these different curve convex LPs. But now you enable a whole nother user, who simply wants to hold their Frax and wants to earn that, that US Treasury type yield. So anyways, that's my best way of summarizing it.
You make a really good point there when you said Frax builds for both existing users that are deep in DeFi, that are experienced, as well as people in the Frax community. And I would say another way I would word it is Sam, and how Sam thinks, like getting into his brain, is like, where is there empirical evidence of there being demand for a specific product? So with LSTs, it was pretty clear that those were going to become a thing, because that was the risk-free yield of ETH, and framing it as an ETH stablecoin was the proper way to frame it. And that's clear because now Frax is in the top 5 of all LSTs in the way they constructed that stablecoin. And there are other products as well. FraxLend, what else was it? FraxSwap, FraxFerry, FraxLend. That especially came true back in the summer during the whole curve fiasco, when Mitch's health levels weren't so high, and FraxLend was the first lending protocol before anyone else, before Aave, before anyone else, to be paid back. And that speaks a lot to the Frax team, not only the products they built and how they build them.
That sfrxETH, I honestly totally forgot about that. Here I am. I'm rambling about the different products. That product has occupied so much of my attention this past year. And that was another one that just came out of left field. And at first I thought, wow, like Frax now is into liquid staking, but actually it's very true to the core mission of stablecoins. And, you know, I think as Sam has put it, like it's a stablecoin that's pegged to ETH. And, you know, that vision of FrxETH could be, you know, the type of thing that replaces the use of WETH being used in all the different products that are out there. Now everyone is holding another stable coin from the Frax ecosystem. And then the cleverness of continuing to use the Convex and Curve bags that the protocol owns by being able to basically incentivize folks with sfrxETH. Like that whole mechanism, it seems so simple to me now, but like when I first learned about that, I was like, wow, like this is really clever. And I feels like I haven't seen this done in this manner, but now it's allowing folks to earn a higher staking yield, which is the number that everyone was comparing. And so that immediately shot it up in, it got people's attention. It shot up in terms of adoption or success, however you want to measure that, and attracted a lot of liquidity. So, you know, Frax is what happens when you have, you know, you have builders who are playing like 22D chess, and
it's my lucky number.
They're crypto natives. They understand the landscape of what's working already. You know, they understand the likes of Curve and Convex and how to plug into that. And that's part of the reason why I think we all think of Curve, Convex, and Frax now as being a part of a family. And actually, I want to say Prisma Finance being a new one is kind of built into that family. Very similar token holders, a lot of overlap in terms of the different investors and token holders. And again, as long as you're continuing to create net new products, new value that happens to cater to the existing user base, I think you're going to do really well. I think that sometimes we lose sight of keeping the existing community of users and investors happy and trying to go after this pie in the sky of like, we're building for the next billion users. And I'm looking at it like, guys, do we even have 100 million users in DeFi? I'm pretty confident we don't. So
do we even have 10,000?
Yeah. Do we even have 10,000? Yeah. You really ought to think about, to the point you made earlier, Dave, about, I think, Sam looking for empirical evidence of demand. That's what makes sense here and now. Actually, I'll end it with this. I think at ETHCC, I probably gave, I want to rank it as one of the top 10 worst talks ever given. I think whatever I said at ETHCC was terrible. This was in summer 2022. I was trying to relate mimetic desire, which is like you can go down that path. And if you read a book called Wanting, it's very interesting. It'll kind of teach you about the fact that people want what they think other people want, you know, whether they're in your community or whether it's like a celebrity. And anyways, this whole like field, if you go down that rabbit hole, it kind of explains a lot of the behavior within the crypto community. And so anyways, my point in all of this was, I think the takeaway from my horrible talk was that you actually should build for the users that are already here and stop worrying about trying to build for the next generation of DeFi users. That the onboarding process into crypto is going to continue to be through, like, I don't want to call it influencers, but let's just call it like this: podcasts, educators, investors. We learn from others. We don't have to like open up a DeFi app knowing absolutely nothing about crypto and finance and be able to go from 0 to 1. That's a world. In order for that to work, you'd need a world that was more financially literate. So the core issue to still solve is that a lot of the world is financially illiterate. Crypto actually teaches you about that through the rough onboarding journey, and that's the
It's a feature, not a bug. It's a feature,
not a bug. That's why. Build for the users that are already here. It'll absolutely serve you well. Frax is a great example of this. It's doing that while preparing for a world where it can onboard that many more users because of stablecoins like Frax and FrxETH.
Yeah, I actually spoke at ETHCC for the first time this year, and my talk was about stablecoin maximalism. And to sum up like Frax pretty simply, because one criticism we get of Frax is, oh, it's so big and complicated, blah, blah, blah. But like, if you just sum it up, is like Frax is a stablecoin protocol that builds decentralized, innovative stablecoins and the sub protocols to support them. That's it. It's based, I like to call Frax a fractal of DeFi, because all of DeFi is in the system. And I think it's just so simple, so beautiful. The team has
I love that.
Yeah.
That is a great way to describe it, Dave. Yeah, a fractal of DeFi. Yeah. If anyone's unfamiliar with that, look up, I might be using the wrong definition, but I think of fractals as in like, if you look at the price action in ETH from like 2018 to 2020, you might be surprised it overlays pretty nicely with the price action from like 2022 to like now. It looks like we're 2023 might look like the start of 2020 something. Anyways, it's a repeat in the pattern of like buying and selling behavior. And I absolutely I can see that. It's funny. Frax does encompass like all the core DeFi, use cases. Yeah, all of DeFi. Like you could just start with Frax and really not learn anything else, and you would be able to take the patterns that you recognize there and go, oh, okay, I get what Convex is doing. I get what Curve's doing. I get what all the other new protocols are doing. So that's it. The only thing that's missing is perps. Perps. We just need perps and Frax.
Kids' favorite, kids' number one request is perps.
Soon TM, I hope.
Soon TM. Yeah. On that point about Convex and Curve, that ecosystem was the first part to really bootstrap Frax. Frax early on was able to recognize the power of Curve's tokenomics to lower its cost of capital to near zero. And it was able to basically win the Curve wars at a protocol level. That's what I like to say. With their Curve ammo, also their allotment of Convex tokens. And from there, they became the one-stop shop for any stablecoin or any project that wants liquidity and to lower their cost of capital to go and have liquidity for the token or for their stablecoin. And that is probably the number one thing that's talked about by other projects, whether they were interviewed on here or on This Week in Frax. Whenever somebody partners with Frax, they always talk about cost of capital, and how Frax really makes it a lot easier for that to happen. And we had on Winter Soldier a bit ago, and we were talking about how, if imagine Frax didn't exist, like how much more expensive it would be to exist in DeFi. Then think of like it would be way much harder, way much more steep of a mountain to climb if Frax didn't exist.
I'm seeing this pattern now repeat with how did I just pronounce repeat? Repeat.
Yeah.
I'm seeing this happen all over again with ETH LSTs. So I remember just having, interviews, investor meetings, whatever, with protocols that were building stable coins. And one of the most common questions, aside from like, how are we going to go to market, was how do we begin to bootstrap liquidity? And one of the most common answers I would give is you really should reach out to Frax and consider trying to build a partnership there that would allow you to incentivize liquidity. And to be clear, the partnership seems to just continue to be this benevolent sort of offering by Frax. Frax is doing this, and it's creating this global dominance of the Frax stablecoin. But I do think at one point in time, I'm betting that Sam and the greater Frax, community were receiving criticism. Like, are you guys just going to incentivize like everything? Like, I don't quite understand it. And again, think now it's starting to become more clear that, yeah, they were taking chances on newer protocols or protocols that seemed to want to be additive in value with Frax. Oh, give me just 1 second. DeFi child walking in.
Child.
DeFi child. You know, I'm a DeFi child. So I'm a DeFi kid.
Fun. My daughter just asked if we can put up a Santa Claus blow up like inflatable. After
DeFi
this,
Santa.
So that's DeFi Santa. Yeah. That's funny. They don't care at all. They just walk right in and they're just like, yeah. So what are you doing? What can you get me candy or get me milk or whatever they want? So anyways, that happened with stable coins. There was an era of that, and it's still going on. It's just that I think we're seeing less of the stablecoin forks. Now we're seeing more of the LST-backed stablecoins. And so anyways, all of the ETH LSTs that are coming around or starting to launch, those teams are now asking the same question, like, do you have any advice about how we can start to build liquidity? And the most obvious thing for me is, yeah, you should be trying to talk to Frax about pairing it with FrxETH. And so I think we're at a point where, it goes back to the title of the podcast, Flywheel. There's a flywheel there within Frax that is working in its favor. And so as we continue to see FrxETH get paired with other ETH LSTs, it just creates more and more liquidity and more of like a dominance of FrxETH while doing good for the rest of the DeFi community. So I don't know. I didn't know that. Yeah.
Go ahead.
Oh, no. What were you saying, Dave? Go ahead.
And while pairing with these other LST ETH peg stablecoins, it's increasing the yield for sfrxETH stakers, because that FrxETH is being paired as liquidity, and those FrxETH are not being locked and staked in sfrxETH. So it's a positive flywheel in multiple dimensions.
That's such a great point. Like actually you guys being more Frax experts are quick to identify that. That's the way to think about it, is the more LPs that are available, the more like organic yield that there is to actually earn on top of like the other incentives that Frax is able to allocate through Curve and Convex, the better, because it's that smaller pool. I think smaller might be it, or it's smaller or near equivalent of the staked ETH. That is what's earning the actual like staking yield. So that little design choice, I call it like little, like it's just so clever. And just, I don't want to downplay the fact that like the moves that Frax has made, and Convex and Curve, and again, I'm going to throw like the likes of, I think, Prisma Finance now, and I'll say F of X, not 0x, F of X protocol. We've had all of these folks on like recently on the Edge podcast, so I have some recency bias with them.
You've had Prisma on?
Us too.
We had Prisma on, yeah. And full disclosure, I hold the Prisma token now. I do, so just
full disclosure, I'm farming Prisma, so I've been meaning to have Prisma on the pod, so we can talk about that after the show. We did have FX on as well.
Would love to help you get a hold of them. They've got these anonymous, pseudo-anonymous core contributors, but I'm pretty sure that you can get their voice at least on the pod, and like it goes back to the ideas we've already discussed of just like building for the users that are already here, understanding what's sticky about this family of protocols, which happen to all use ve-tokenomics, and thinking how can we provide products and offerings that attract them, and now that bootstraps our liquidity, it gets them on board. Now they're holding, in the case of the Prisma farming, they're holding that token and they're locking it up continuously. The locking up part of it, that could be a whole nother part of our conversation here, is just like finding ways to convince users to do what is in the best interest of the protocol and the token value without having to, what do I want to say, like twist an arm or like hold them hostage. Like, I think these protocols all give you the choice. If you just want to earn curve rewards or convex rewards, you can do that and you can dump it. But if you start to understand the way that those protocols are designed, you see all the opportunities of like, well, I probably could be doing more here by locking it up or providing liquidity with that. You know, this assumes that we're in a market that's not like 2022 where everything is dumping to zero. But yeah, there's a lot there to unpack in terms of how clever those protocol designs have been.
I was talking about.
I actually wanted to.
I think last. Yeah, go ahead, Kent.
I just want a quick question for DeFiDad here is like, do you think the ve-tokenomic model is going to be here to stay? Like that is just the way airdrops or farming rewards are given, some form of locking mechanism. It doesn't have to be 4 years, obviously. But do you think it's going to be a staple moving forward?
That's a good question. So I think it all depends on which protocol we're talking about in relation to the locking. So I think that the flywheel that Curve and Convex have created is unforkable right now. And so there's new protocols like actually Maverick has a ve-tokenomics model. They're doing, I would say, relatively well. They've got pretty impressive trade volume. It tends to be like top 3 or 4 on Ethereum mainnet, top number 1 on like ZK Sync, and it's growing on some other chains like Base or L2s. But okay, like things move so quickly. Like my gut is just to say in like 5 years that ve-tokenomics, you know, could totally be gone, you know, eradicated by some next evolution. But I actually think there is a foundation there that works. So like, I think the next evolution of ve-tokenomics that we've seen this cycle, so this is moving beyond like, let's say 2021 was the end of the bull cycle and we started this new horrific cycle that was 2022, 2023, and now we're potentially in a new bull run. I think that I think that the next evolution has been the Prisma Finance offering with Convex, where if you earned the retroactive airdrop with the Prisma points that they offered, those tokens were claimable depending on who you were and how you earned them. They were claimable as a vesting token, which was locked up for 26 to 52 weeks. So half a year to a full year. Then the other opportunity there was instead you could just claim it. Like everything that you claim, whether you're farming or you earned a retroactive airdrop, it's all claimable instantly through Convex. So Convex has moved beyond just Curve and Frax, and now it's trying to suck up the token supply of these other projects like Prisma and F of X protocol. And so this caught me off guard. Like I kind of knew, you know, because of what had been published and online that, you know, there would be some sort of a locking mechanism. But on the day that the Prisma Finance retroactive airdrop went live, going to Convex and realizing, hey, I really could just claim this all as CVX Prisma, lock it up, earn some crazy high yield, knowing that it's, by the way, it's very illiquid still. The CVX Prisma is not liquid. Like there's no liquidity for it. But knowing the way that Convex operates, they will start to allocate rewards and build deep liquidity for that, like they have for CVX Curve. It's just going to take some time. I mean, right now, like the clock's ticking and there's nothing that you could do. If you had if you had locked Prisma that was vesting over 26 to 52 weeks, you're also just sitting on this token that is earning some rewards and gives you a boost in the protocol. So anyways, I think that I want to call it a lock drop. I can't remember the exact term that was used.
That's it.
Lock drop. That's just, you're getting everything you want. Lock drop means that on the day of your token launch and soon after, you're having, your token locked up no matter what. But in this case, it's being locked up ultimately by Convex. Convex is seen as a fairly positive sum player in the space, a team that is here to stay and is not going to rug. So now they're locking up the token. The token now is going to be used rightfully the way it should be in the protocol to, boost yield and allocate rewards, used for governance. So it's just a win-win overall for the protocol and its token holders. And it's a great story to tell too, of like, it's sitting in the hands of Convex holders, which maybe that's the whole other conversation of, I'm not a Convex token holder, but man, I look at it and think CVX holders control 65% or something of the supply of like Curve. Oh, well, there's Convex, of course, itself. There's F of X, there's Prisma, there's Frax, the FXS token. And I think there's another one too, the FPIS token, if that, I'm thinking of that correctly.
Yeah.
Yeah. I think that there's a huge supply of that's been sucked up there. So yeah. What do you guys think of the lock drop? Am I overplaying it? Or like, I feel like if you are a ve-tokenomics model that plans to be incorporated into that Curve Convex Frax family, like you do yourself a hell of a lot of good by getting it
I find it
in sync with them.
Yeah, I find it interesting how Convex didn't onboard a new token onto their platform for 2 years, pretty much. It was Curve was their first, then FrxETH. They still got, FXS early, so they were able to get a meaningful amount of the FXS supply. And they waited 2 years, and, it's all about timing, and much more about timing than anything else. And it probably took like a bit for a protocol like either FFX token, which is from Aladdin DAO, who's been working with Convex for a while, or the Prisma guys to, create a tokenomics that was quite friendly towards Convex and to like have the Convex like want to include them on their platform. So it makes sense for something like the lock drop to happen and for that to be part of the evolution to, to the VE system. And I'm sure like we're going to get more iterations like that. I wouldn't call that like a huge step forward, but it's definitely like a strong iteration forward.
Well said. Yeah. We haven't like built a spaceship and gone to Mars here, but it's a step in the right direction. And I think it goes back to this, like, how can we continue to build for and design products that cater to our existing user base? For Convex users, this is huge. Like, it's sucking up more and more of these different token supplies, and that's going to accrue value, I think, to the CVX token over time. But meanwhile, all these other new ecosystems like a Prisma is basically bootstrapping interest among those that are already in Convex.
And, you make a good point that FX protocol and Prisma are literally protocols built for existing users, whether it's FX protocol with their low volatility stablecoin product and high volatility ETH stablecoin as well, or if it's Prisma for all these, everyone that has their LSTs, sfrxETH, and all the other ones, if they want to, have another stable and go play some more farming games, boom, there's Prisma. So I feel like the whole Convex ecosystem builds for existing users, and I feel like you have this, like growing class of, I guess like Convex coins, you would call them. Everybody, like this like self-sufficient ecosystem of Convex coins that are growing together. And there's this flywheel, whether it's Convex holding the governance, Curve with the liquidity, Frax with the stablecoin, and helping lower the cost of capital for everyone else. It's a really interesting flywheel, and each new token and each new ecosystem that gets added makes that flywheel stronger and more resilient.
Yeah, the F of X, they wanted to create a floating ETH stablecoin. They wanted to create something that was more censorship resistant than some of the USD peg stablecoins and some of the LSTs that are, exposed in some manner to some centralized risk. And so, you could argue that if you create these protocols at the start of a bear market, they really do potentially like die off, because the the issue in a crypto bear market is that your most like loyal user base is just getting crushed, by the bear market. I mean, everyone is, but the folks that stick around, everyone's getting crushed. There's so much value destruction, and it's tough. It's just a really tough time to convince folks to put what little capital they have left to work in new protocols, knowing that those new protocols are unlikely to attract a lot of attention while everyone is running around in total chaos. It's the total opposite of that when we move back into a bull run where folks start to believe that everything can work for better or worse. They start to believe that, every idea is a good idea. And so as those loyal, long time crypto users, DeFi users, as their portfolios grow, they're not going to let their capital sit idle. They're going to, make sure that it's being maximally put to work. And that's where I think it puts us into a really interesting situation with the likes of Frax having survived well, technically Frax started at the end of one bear market, lived through a bull market, and now has, I would argue, we've lived through another bear market. So I'm really excited. Like, this is DeFi's, this bull run that I think we're already in is the first time that DeFi has now survived the thrashing that it did. And so it's going to be really interesting to see, how things play out. Like, I think like a lot of projects died and the long-term builders have only grown, like it's, maybe the numbers aren't quite where we want them to be, in terms of trade volume on chain, and the growth of stablecoins, I think, is still so early. Like, we're going to see the liquidity of stablecoins like Frax and all the other stablecoins. I think collectively those USD pegged stablecoins are going to be worth $1 trillion, in this coming bull run.
That's exciting. We like the sound of that.
Yeah. I do tend to overestimate on that. Maybe actually last bull run, at the start of it, we had just hit 1 billion in total value locked. And you can argue till you're blue in the face about how flawed that metric is, TVL, but it was an amazing rallying cry for DeFi, just the way that the price point of Bitcoin and every other token was. It was like a number to say, like, look at that thing continue to go up. And that's because we're doing our job and we're, onboarding folks to the future of finance. I remember, though, when we hit 1 billion, people thinking, it's very unlikely that it's going to go that much higher, because people were in denial at the end of the last bear market. And then I think it went to like 250 billion. I am thinking, I think this is the same sort of thing. We're going to see trade volume on chain is going to go nuts. Perps trading on chain, let's say true decentralized perps trading, that's going to go nuts. Stable coins, basically grow during stable coins. Like the total value of stable coins seems to grow at all times other than when you are truly at the worst, like the bottom of the bear market where everything's stagnant and everyone's sort of looking at each other like, are we going to drop another 50%, or is this like shit show finally done with? And so I know there was a pause in the growth of stable coins this year, but I want to say I had just seen, I think it was like my buddy Dynamo Patrick might have mentioned, he noticed on DeFi Llama that like the total amount of stable coins on chain was finally starting to grow.
We covered that at Flywheel.
That's exciting. Right? Yeah. You did? Oh, there you go. Yeah.
Shout out Sam, our producer, covering that.
Yeah.
How long ago was that, guys? Do you recall? Like, was this like just weeks or months ago?
Maybe like 2-3 weeks ago.
Yeah.
That's exciting. That's huge, right? Like it seems like a pretty like, minor sort of thing to pay attention to, but I'm like, we only have so much data on chain that, can help us to tell a story and make sense of all the different behaviors out there. And of course, I'm thrilled that prices are going up and we're seeing like a rising tide lift all boats. But the fundamentals that I think the three of us and many others are focused on. We want to see fundamental growth like the total market cap of all stable coins. Like that's a hell of a nice metric to look at. I still think total value locked is actually a great metric. I just don't think like it's very unfair to compare a lending and borrowing app with like a DEX or maybe a perps exchange, right? Like it's not taking into account the capital efficiency involved and the different utility involved in these different dApps. But still, it's a great number. It's like you look at, let's say we look at Uniswap V3. If the total amount of ETH, let's not even say USD, total amount of ETH is growing, that's exciting. Like we know that there's more capital being deposited into Uniswap, and that's,
I have a really funny story about TVL. So back in DeFi summer, when I first, was getting exposed to the world of Ethereum, because before I was at Everpedia, which was in EOS land, which is funny enough. And to hear in the news that Bullish brought CoinDesk, it's just like, it just took me back for a second, reminded me of the story. So with TVL, I remember, do you remember Pasta? Do you remember?
I do remember that. I never got into it, but I remember the memes of like, there was like,
it's all pasta. Yeah.
It's all pasta. Yeah.
But when that came out, I had like no conception of TVL, what was a lot of TVL and what was a little of TVL. And Everpedia had this product on EOS called Predict, which was a prediction market on EOS. And I made a prediction market of will Pasta have $500 million in TVL by X date? And I had like no conception of like, is that a lot or a little? And like it went viral on Twitter and everybody was like, I remember Robert Leshner tweeting something like, if this gets to $500 million TVL, we should really consider why we're all here. And like it was really funny.
That's
and
hilarious.
Like, yeah. And it was like, how do I participate in this prediction market? It's like, and so, but yeah, it's just funny, like thinking about like, and to that point of view, we're saying like TVL is like not perfect of a metric, but it does give a good signal of like the amount of like interest and the amount of traction a protocol has.
Yeah, I think that's it. It's playing that meme of like the bell curve, and you can sit in the middle of the curve and be very methodical in that analysis, but you got to remember that crypto is very reflexive. And so when things are bad, they get really bad really quickly. They tend to like overcorrect to the downside. But when things are really good, they tend to overshoot values to the upside. And I think, knock on wood, that we are in that phase now where things are starting to shoot to the upside. We absolutely have not, overshot value. We're making up ground from all of the value that was destroyed during the bear market. So anyways, when you look at that meme of it's like the Jedi on the right side and the person has a lower IQ on the left side, there's some truth to that. Like, I think that I remember when I first got into crypto, I remember looking
when was this?
at
what year is this?
This is fall 2017. I actually still feel like a total newbie getting in fall 2017. I like compare.
That's us, class of 2017. Let's go. Me and Kit.
Yeah. I tend to benchmark off the guys that got in 2010 to 2013 and think, wow, those people really probably had a tough time like convincing themselves and sticking with this because things were so early. So back in 2017, I remember just looking at the fully diluted valuation or the market cap, actually not knowing the difference between the two, and thinking, okay, let's say a token like Ether, and just looking at it in comparison to Bitcoin and thinking, well, can't it follow the same path? I'm new to this, but they kind of look the same, except Ether seems to be faster and lets us do that much more. Like when you don't know anything, you're just you're just comparing everything and you're looking at the simplest numbers, market caps, how many token holders are there, how much has it gone up in the past 7 days versus 30 days and so on. So obviously you evolve beyond that if you stay in this space. Hopefully you survive and don't get completely wrecked making such simple comparisons. But even as you become more knowledgeable and you understand the way that the crypto community values or overvalues or undervalues certain protocols, I think it's important to not lose touch with just, again, how difficult it is to onboard into this space and to absorb all that knowledge. And so, there are times where, again, I look at the bell curve meme and think to myself, like, I'm totally being that like middle of the curve type person right now. And I'm overthinking it when like really numbers going up, and that's a positive, and folks are going to continue to be excited for this. I like to give probably the simplest example for me is I was watching Solana during the bear market thinking, I know that there's a lot of fundamentals here. I know that folks are still building. I'm sure it will come back, but man, it's facing some crazy headwinds with FTX and just all the selling pressure. And for me personally, my plan was to kind of sit comfortably, not being a long-time sole investor, and look for an opportunity to be able to possibly accumulate it. And so for me, I finally saw that opportunity at some point with like just the absolute capitulation of selling below $10 and then sort of seeing the sentiment shift. I almost feel like it's gotten a little bit too arrogant and cocky too quickly. Like there's still everything. Right, yeah, everything's getting built on Ethereum L2s, but there's a lot of awesome activity there on Solana as well, and other ecosystems like Cosmos. I want to say, like, okay, the takeaway from all of this is that you start out with a really simple understanding of what's in front of you, and then as you advance and become more knowledgeable, it doesn't mean that you should forget where everyone starts. And I've tried to continually gut check myself and remind myself by either talking to folks, reading their posts on Twitter, listening to spaces, whatever, and being reminded, like, not everybody is able to work full time in crypto and have the luxury that I do of like talking to you guys and other experts in the field. Like that's a real privilege. So I get to absorb a lot of that information and try to like, spit it back out to the masses and turn into like a story that is digestible. So anyways.
Yeah, that's what we try to do here. I mean, yeah, we're all so lucky that we live and breathe this space and have the opportunity to constantly be around information. And when you said gut check, like I really resonate with that because I constantly try to gut check myself, whether it's in crypto or DeFi or in the Frax ecosystem, because everything just evolves so fast and it's easy to get complacent and cocky. And like, I think like the space has like a way of dealing with pride. And like, once you feel like, yeah, like, I'm so far ahead, blah, blah, blah. It has a real way of like knocking you down.
Totally. Like when you make those sort of generalized statements, like honestly, I kind of made one a few minutes ago there. I said, everything's being built on Ethereum L2s. Well, what I really mean is that there is more trade volume. There's more liquidity on Ethereum L2s and on Ethereum mainnet than anywhere else right now, collectively. Fine. That's the state of the world. I absolutely believe that EVM will continue to be very dominant, if not the most dominant. But does that mean that we should ignore what's being built elsewhere? And I think like the best, the best lesson that I've taken from all of this is just continue to be open-minded, have conviction in why you're involved in the likes of Frax. You have to have it to be able to survive these horrible bear markets, but don't like totally turn your mind off to what's new. There's in a bull run, everyone chases the next shiny object and it becomes unbearable. Like we're now coming out of the bear market, wanting people to be just interested, like new people to come in and be interested and for the space to grow. But if you remember the end of the last bull run, I mean, it really, you see some really disgusting behavior. It just feels like everyone is chasing the next shiny object with the like maximum amount of greed in mind.
Yeah.
So yeah, you got to ride the ups and downs of the space and keep
even
a level
the beginning of this bull's market is kind of unbearable, to be honest. It's hard to look at the timeline, and you really have to kind of customize it to your liking and not get distracted or get FOMO. Like I find myself constantly muting people in words because I observe myself saying like, why am I feeling this way? It's like, oh, like I'm feeling missing out on something. And, you have to like realize like whatever you do in the space, whether you're a developer or a builder or a writer or a trader, you have to keep your eye on the prize. And to keep that eye on the prize, you have to like be able to get in the zone and focus. And if you can't get in the zone and focus because you're constantly feeling FOMO, then like I don't know what to tell you.
Yeah, it's a marathon. I think of this space as a marathon, and it's about surviving long term and not thinking about
and not blowing up,
not blowing up, not having to like FOMO into every opportunity out there. So yeah, but also too, I guess like part of my job at like Fourth Revolution Capital. So we're a smaller fund in the space compared to some of the other funds, but we focus on DeFi, Web3 games, and this like cross section now of AI and crypto. And those are pretty like big sectors that I just named there. So anyways, you have to also, find some sort of pattern recognition in this space, whether it be with like founders or with protocol design. And I mean, I'll say that like, I just constantly feel like I'm always behind and like I'm losing my own edge on this space and not keeping up with what's new. I actually just today, I think I mentioned to Nomadic, who co-hosts the Edge podcast with me, I was like, dude, I just feel like I'm really falling behind in terms of like the basics of what's happening at this like bleeding edge of AI, so just the basics is what I'm referring to. And obviously like I tend to like focus more on like, well, where would AI work really well with Web3 and specifically DeFi? Like, could DeFi be using AI as like a digitally native intelligence layer, and vice versa? Could, AI use the value transfer and the value storage that's digitally native within DeFi? So anyways, that, I stick to my roots of DeFi and Web3 crypto, but yeah, you just, how can you keep up with all this information? Like there's so much happening there. And I think the answer is you gotta,
that's why
you gotta figure out your lane and stick to it. So.
And that's why we focus on Frax.
Actually, I wanted to ask you guys, I feel like the general consensus here is that we are back in, or we are closely inching towards a bull market. But could you walk me through what were some of these signs that you're seeing that's making you say this?
Boy, that's a good question. What were some of the signs here recently?
I feel like when ETH hit 2000, like that was a real sentiment change. Like I felt the vibe shift.
And to be fair, I actually thought we were in a bull before ETH hit 2000. Okay, one of the things that happen that's like a very like common sign is you start to see the meme coins going off. Like I've noticed that Bonk on Solana was doing really well. By the way, I don't hold Bonk, just commenting on the fact that the token had gone wild, and it actually was going up in price, and every other alt seemed to be going up in price in the spring. I thought in the spring that was the first sign of like that initial wave upwards from the bottom of the bear market. Like, okay, here we're starting to see this crazy buying behavior. We're starting to see an intense amount of FOMO that's leading to ridiculous price movements over very short periods of time. And then I really did believe like the correction that was happening during the summertime or like starting into like the fall there, that correction looked like a very, normal correction for me in when the market has turned bullish again. The issue, of course, is when you're coming out of the bear market, there's a lot of denial and like, are we back in a bull run, or is this like is this one of those classic bull traps? Yeah. Are we still in the bear market, but we're like being led to slaughter? And so anyways, more recently, there's been, the short-term price movements that have felt unreasonable, where like you look at a token and it launches and the token has gone up like 20, 30%. And then the next day it's up 10%. The next day it's up another 20. Like we haven't seen that sort of price action in quite a while. It's just been like down, and then recover like 1% and continue to sell off. Another one has been token launches. So I think, throwing aside the more generalized idea of like the price action looking more bullish, there was the token launch for TIA, Celestia. Oh yeah. Like that one shot up to billions almost immediately, and it seems to be holding its value. I'm not looking at a price chart right now, but like that thing holding billions in a fully diluted valuation was not surprising to me. But in a bear market, no way. That token goes sub 1 billion instantly, and there's a story of like, wow, where's the bottom on this thing? It's just continuing to sell off. I think the fact that that token has continued to hold a multi-billion-dollar valuation is pretty impressive. Prisma had an insane token launch. That now it looked familiar to me in terms of like a bull market where it shoots up to an absurd price overnight because there's a low float. And it's selling off, and we're trying to find where's that fair market value. Folks just are going to keep selling until the market decides that enough is enough, and it's time to start buying. But that could have never happened in 2022. I mean, I remember Velodrum launching, and Velodrum is a much different protocol. But like, I mean, Velodrum was like 25 million to maybe like 5 million fully diluted all during the summer 2022. So I think the takeaway from all of that is just that there's just so many headwinds working against you. There's, I guess, here's a third marker for me. It feels like all of the really scary macro talk finally died off. Like we had the overhang of Gary Gensler and the SEC, who, looked like they were going to just continue to squash DeFi protocols and like legitimate builders. Like I really do believe they have, really like come down hard on some like very legitimate folks.
The Opyn guys.
Yeah. Yeah, did the Opyn guys totally shut down? Is that like
they like I think I saw like the two founders just like left there and just like not in crypto anymore or whatnot. Really hostile environment. Yeah.
Yeah, I could see that. So there's a good example. OPYN Opyn. That was a team that was early to building DeFi options. Absolutely forward thinking as a team. Good people that I got to interview them a number of times. Like you talk about like they were like flagship types of builders, like starry-eyed young people who had like a grand vision and wanted to build to democratize access to financial tools that aren't available, elsewhere. So anyways, that sort of, what do I want to say? That, negative impact that they had on the space finally seems to be less of a talking point. I think it did help too that the Bitcoin ETF talk and the Ethereum ETH spot ETF application, those are just like wildly bullish types of stories. I'm not going to say whether or not they guarantee that the price of these tokens has to go up because of the amount of those tokens that have to be bought to satisfy ETF holders in the future. I think it's more about give us a positive story that we can believe in and reinforce, that crypto will see a greater adoption, mass adoption, however you measure that. So that was another one that came out of nowhere. There was like the false news story by Cointelegraph. They kind of like, to be fair, like that story was like a few weeks, ahead of its time in terms of like the takeaway at being like, hey, the applications are moving along. I recognize the headline was false, but the takeaway was that the space was moving forward. And, we still don't have confirmation of this, but I think that it wasn't the fact that those stories came out or the fact that the spot ETFs could get approved any day. It was the fact that everyone perceived that as positive and was actually acting on it and buying and talking about the fact that like, hey, like, I think the worst is behind us. You have to convince more people that the worst is behind them, or they have to come to that conclusion themselves. And I'll say I felt that sort of confidence probably around the time this ETF news started to come out. Like, hey, I think it was like a hope that I had that the worst was behind us, but I'm like, now I'm convinced. And here's the final icing on the cake. Now reminds me, it's, November 2023, now reminds me of like late 2019, early 2020 with DeFi, where I'm looking around and I'm like, there's so much cool stuff that's been built that is useful and that's about to launch. Like we interviewed Infinity Pools. You guys did too. We interviewed them early. Infinity Pools, such a cool protocol. Like I think like it's going to be a type of protocol that people use because you can use such incredibly high leverage on it and feel a little bit less degenerate than the way you use leverage on other perps platforms. So they're a good example of the really innovative types of teams that are out there that have been building, and now they've got the product live. And I think now the market hasn't caught up. I feel the way I did back in late 2019, early 2020, where I'm like, it's so obvious that this is going to work now, and that there's all this like utility, but for whatever reason, people are still, living in that 2022 mindset. I've got friends and family that are like, is crypto like doing better now? Is it going to survive? And I'm like, okay? You're crazy to not recognize it.
That I had, people like left the industry that I know. I think like all those are tall tale signs that, things are, forming a foundation for the bull to take place. When all the tourists leave, and then, the real ones are left, the builders are left, the ones that like stay through thick and thin are left. And then that, gives like a sign to the market guys, like, all right, time to run it back.
Guys, do you see any other signs that like, I think I covered 4 or 5 different like signals there, but I kind of like laugh at, I said, the fact that the prices are going up. You're like, oh, you think we're in a bull run because prices? Yes, we are in a bull run because price went up. But you get the point.
The ETF.
So let me summarize here.
Go ahead.
Dave, 1 second. Let me summarize the points that DeFiDad was just laying down here. It's like, first was meme coins kind of going off. All right, interesting. Risk capital is flowing in or flowing there. Second is price action in the sense of like token launches like Celestia. The way you put it was really eloquent, is we haven't seen something that goes up 20% today, 10% tomorrow, and then 20% more the day after. Like we have yet to see that. We've been, what I call bear conditioned to always expect it to do this and then punish, but it didn't. So that really changed the paradigm. And thirdly is the macro sentiment completely changing in regards to the basically the attack on crypto per se. So those are kind of like the 3 largest, salient points, I feel. I would add a 4th to that, which is what we mentioned earlier, was that stablecoin supply increasing. I think that
great
is
point.
Very clear. Yeah. Like we haven't seen that in a long time. I think there was this the Tether bot on Twitter that posts like, X million of Tether has been minted. I haven't seen that thing go off in so long, and it popped up on my timeline like I think earlier this week or so, and I was like, there it is.
There it is.
Capital's coming in. Yeah. Those are same with mine too, lining up.
Yeah, you got to take those wins. Actually, there was I want to say Alex Vanenic or something like that. He's the founder of Nansen. He had a really clever list of like top 10 reasons we're back or something. And one of them was that SBF is convicted too. Like that was a black cloud that hung over the space. I think it's crazy to think like a year ago, we were living with the aftermath of FTX and uncovering all of this fraud. And that's how quickly the crypto space changes. And, I'm obviously there's a lot of unrest in the world still, but, there was clearly a lot of worry about different wars erupting. I mean, I feel like most recently in the aftermath of the terrorist attack on Israel, and then in the aftermath of the Russia invading Ukraine. I mean, these are pretty awful, intense world events. People dying, and there being a risk of more people dying, and I think rightfully, of course, the markets price that in, and these events are not resolved by any means. There's still a lot of unrest, but I think the shock of what happened there, globally is for better or worse, has somewhat waned in its intensity. Mm-hmm. Like we're not feeling the shock of it as much now. So that said, I'll say like there's another bit of optimism, like for folks that are in the United States. We're coming into an election year. Election years tend to be bullish. And I think it's as simple as it doesn't matter who you are, who you vote for. When you believe that you have a candidate that is going to do a better job and that life could be better under them, it creates an optimism. And so, yeah, I could actually see going into election year being very bullish. I mean, that was the last setup was what, 2020? Yeah, 2020 going in. It lines up with these, the Bitcoin halvings happen to line up with these U.S. presidential elections. So
how convenient.
Yeah, how convenient. It's because isn't it the NSA or CIA started Bitcoin?
Oh, of course.
Right? Isn't that yeah, that's it. Yeah. So
of course.
That's a joke if anyone hears that, but yeah.
I wanted to switch gears a bit to talk about, instead of just DeFi, the state of storytelling and media in DeFi and crypto, because you're a part of it with the Edge Pod, and you've been creating content for as long as I can, like I said at the beginning of the pod, as long as I can remember. So in your opinion, what is the state of storytelling within DeFi? What do you like that you see? What do you don't like so much that you see? This could be like tutorials, this could be podcasts, this could be anything video, media related, podcast related, anything.
So I'm very proud that I think we've continued to like evolve and grow as a space. I swear back in 2019, 2020, that it was very rare to listen to a podcast or watch any sort of crypto content and hear a disclosure. And I think that, oh, there we go. That's another call for Santa, for me to put up some Santa inflatable thing on our lawn. Okay, if you go back to 2019, let's say, I don't think there was a lot of folks disclosing like when they had an investment, and I do feel like that's become more of a norm. Like it seems ridiculous. Maybe it's a low bar to set, but yeah, there's little things like that. I think we as a space have become more transparent. There's still like bad actors and grifters and all of that, but I do think there's folks like you guys who are trying to tell the story of, I want to say, like you're like trying to cover like the indie rock bands of DeFi. And this is that's how I would describe the Edge podcast. Like we're trying to uncover the next generation of promising builders and protocols before they go mainstream and have like billions of dollars deposited in liquidity. Every so often we do cover a mega builder like Instadap or Frax, but I do think like we're doing a really good job. I'll say like you guys and us and others of, telling stories that are compelling. Like, I think like there is some muscle memory to that and it takes a lot of practice. Like I'm still not super satisfied with everything that we put out through the Edge podcast, but then I have to compare it to like, if I look back at what I was making with an iMovie, recording it all in one take, like it was brutal. Like the production quality of what I used to put out, and thank God people were so forgiving and like were willing to watch that because there was no content back then. Now it's a lot more competitive, and as a result of that, I think the editing that you guys do and I do after these podcasts really makes a difference. I'm not doing it to hide my my inability to speak clearly at all times without filler words. I'm doing it because I'm just trying to make the story as easy to listen to as possible. So, putting things visually on screen the way that you guys do, like you do some really clever animations, that makes a big difference for folks to be able to, consume some of these really complex topics that you'll cover on the podcast. So I've actually, I'll say this, the Edge podcast for me right now is like, it's like a hybrid of where I started and kind of like where I wanted to take my content next, which was, I wanted it to be more polished, but I didn't want it to lose the sort of like charisma or genuine nature of like just me recording myself talking about protocols and trying to like help people like understand step by step how to use them. I'll say this, I kind of miss doing just the tutorials. I
nostalgia.
I keep telling myself that like I might return to just doing tutorials at some point. So what I've done with the Edge podcast, what Nomadic and I are able to do is we do the interview with the idea that you could just listen to it like any other podcast, but we try to methodically structure the questions so that it's almost like, it's like, here's everything that you would ask or need to know to get started. And then I will record myself clicking through the application. And so I try to turn it into a tutorial, but it's still not quite the same as like, all right, so next I'm going to do this. I'm going to click here. I'm going to click there. Like I do miss that. And I know that adds quite a bit of value. And there's other folks out there doing straight up tutorials like that. Like I really like Dynamo Patrick. I think he does a really good job with tutorials. So anyways, the more generalized view though of content today in DeFi and crypto is it's really impressive, the production quality. There's a lot of content out there. I think like if you're into like TikTok, it's, someone just talking into their phone and they do a great job and they weave in all the subtitles and like they put in stock footage and it's really snappy. It's meant to be 60 seconds of video. But then I think, again, like the type of content you guys are doing and I'm doing, I love the idea of having these longer conversations. Sometimes I guess we do 35, 40 minute like podcasts that are a little bit shorter than the average one. I think that the production quality has really gotten to be that much more impressive. And what will be interesting in this next bull run is another space I think I'm really bullish on is Web3 content, Web3 social. So like we post all of our podcast videos aside from YouTube, we put them onto Lens. And I do believe that like having some ownership in those rails could be huge. Cause like with YouTube, like I'm always just one notification away from being kicked off. I mean, it's very scary to me that like you really could be kicked off for whatever reason. Someone reports you and says that you covered a financial product that shouldn't be covered. Someone could make a mistake, ban your account, and now you're in a begging position with YouTube saying, hey, please, like, I think there's a misunderstanding. Like, can you guys please let me into it? You don't own it. And so that's a really compelling use case for crypto content creators to start to adopt something where you actually own the rails with Web3. When
you talked about the tutorials and how that's how you got started in DeFi and creating content, that reminds me of myself with writing. I got started really in DeFi, kind of writing threads, and that's how DeFiDave came about. I've been on Twitter for way too long, but like DeFiDave started in 2020, and back in 2021, I started writing for the Defiant, which I saw you're an advisor for. And from like 2021 to like 2022, I would write articles about the conferences I'd go to. I was working at Gelato at the time, and I was able, this is my thing, I'd get like a press pass for the Defiant, and then I'd go like interview people, and I would let my natural curiosity drive the articles and drive what I was interested, like drive what I would write about. And I did that like for several conferences, and you can still see them on the Defiant website. Cam, shout out Cammy, friend of the show. And I feel like I use that same natural curiosity and interest for the questions I use on the pod. We may not be like the most beginner podcast, and we try to be as beginner as possible, but we really are like the podcast for the more intermediate, advanced DeFi user. Like we really like to get into the gritty, dirty details of how a protocol works, how a builder thinks. And a lot of times we hear from guests on the show about like, this is usually if not always, like their favorite pod that they're on because of the way me and Kit construct the interviews. And me as the word cell and Kit as the shape rotator, we make a pretty good duo and team there.
I love what you said about whether it was writing for the Defiant or producing the podcast here, kind of leading with that genuine curiosity. That is, I think that's our greatest strength with the Edge podcast. But it's also like, I would argue it's probably the thing that will hinder us from growing the way that I'd love for us to like grow to like 1 million subscribers. I have my doubts that you can grow as quickly as others will grow without chasing the more clickbaity types of things. Without, like, no doubt, people would love to just hear podcast after podcast of crypto investors saying why they're so bullish on crypto. And there's lots of other folks that do that. They do a good job with that. But like, I really do want to I want to cover stories that are compelling to folks. But I feel like if we don't cover the stories of infinity pools and FX protocol and Prisma Finance. And we just recorded, and hopefully we'll get this out in the next few days. We did one with these guys who do, you can trade real estate indexes on Solana called Parcel. I'm just like, well, what's the point of covering the same talking heads? I want to talk to the folks who look like they have a really promising idea, have some compelling product market fit figured out, and could grow to be an enormous protocol serving a wider group of folks in the DeFi space. Will we strike out? Absolutely. Like we are absolutely going to pick out some losers at times that will die off very quickly. But I do think there's this information asymmetry in crypto that continues to carry forth despite all the great content that's now being put out there. The fact that like in 2019, I think I was like one of, if not the only person making any sort of DeFi related content. And now it's all over the place. Like it's being mentioned in, even the YouTubers who only talk about crypto prices are covering or interested in DeFi. So that's cool, because it's like I think it's the killer use case, or it's one of the killer use cases of crypto and blockchain. So yeah, I mean, we've got a long way to go, but I'm hoping, I hope when people listen to Flywheel, DeFi, and the Edge podcast, I hope that they're recognizing a concerted effort to try to spotlight who are builders that are looking to make like a meaningful impact in the space, who are really looking to move the needle, not just like copy paste the same perps exchange and rebrand it and put a new logo on it and make a token go up 100x, you know, like I'd love to see protocols we cover. I'd love to see for their token valuations to go up. Like that's fantastic. But like, for me, it's like, are they attracting lots of capital? Are they growing their number of like daily, monthly active users? Are they making DeFi that much more appealing in comparison to traditional finance?
Yeah. To going full circle to what you said at the beginning of the pod, you were talking about how, you know, there are protocols out there that are, you know, they may be trying to make for new users or like consumer dApps and consumer applications for new users. And then there are protocols that create for existing users. And the new users, they kind of like, oh, they see something shiny, they try it out and they go on. They're not loyal. Going full circle, you can apply to the same to content as well. You have a lot of beginner content out there, and then you just have people that are, you know, maybe just interested. Maybe they heard about it from a friend. Maybe, you know, they just stumbled upon it randomly. And they, you know, they're like, oh, like that's nice, that's interesting. They may not get it. They may get intimidated, and then they go. And those probably like inflate a lot of the numbers of content because it's just like beginner content. So people were always like searching for beginner content. But what really matters, and I think, and what I know actually, what we focus on at Flywheel and what you cover on at the Edge podcast is like the content for existing users. It's the content, it's the way that we go deep into protocols, find the up and comers, and dig into like what they're really building. I would like to compare it to when I was younger. I played football and I loved keeping track of like prospects in like high school and college and like who's like the up and coming, like, you know, next star quarterback or running back. It's the same thing, but with builders and developers and projects. It's like who's like coming up on the underground, who's like putting in the work early and building like the next generation of great DeFi applications. And like nothing gets me more excited than that.
Well said. Nothing to add to that, but yeah, well said.
And I think that actually like that's a good place to end this pod. But before we go, we have our lightning round where we go off chain and get to know the dad behind the DeFi. Kit, go ahead.
So DeFiDad, what was your virgin crypto experience? And sex doesn't count.
I think I bought my first portion of a Bitcoin in September 2017. Pretty sure I bought that. And then I think I bought a little bit of Ether shortly after that. On Coinbase too. That's where I back then I was.
But that's a sex, and sex doesn't count.
Yeah, that's a sex. When did you first touch the blockchain?
That was shortly after. I want to say October 2017. I set up a MetaMask. No. I did set up a MetaMask, but I set up my Ether wallet first, I think.
Yeah.
And it was my Ether wallet and then MetaMask maybe after that. And I set it up actually. I had bought a tiny bit of Ether and I bought into Bloom, BLOOM, which was an ICO for identity. I want to say it was
scores. I remember
credit score. Oh, it was just a team of people who literally did nothing. I'm confident they became unimaginably rich if they held on to that Ether, which I'm guessing a lot of it got dumped. But Jesus Christ, it was just so dumb. It was a bunch of like Stanford graduate students. I mean, like this is why like I laugh at things that people do today because I know that I'm probably guilty of having done a lot of those dumb things, years ago. So.
Got it. And the second question is, what is your favorite off-chain touch grass activity?
Oh, that's a good one. I really, this is easy because obviously it would have to do with like my kids. Probably the thing I do the most to like get away from crypto and touch grass is to literally walk on grass. And I golf a lot with both of my kids who are very young, but both of them really like to golf with me, and I also love to play baseball and basketball with the kids. So yeah, that's honestly the bonding time I get out of golf is so much fun. And I didn't grow up golfing. I just kind of took it on more around the time that we had kids, and I've turned it into this incredible excuse to go golfing once or twice a week. Yeah, I was like, oh, it's for the kids. It's for the kids. I'm doing
real
this for
touch
the kids.
grass hours. What would be some advice to your younger self?
Oh gosh, I feel like I evolved pretty quickly around the time when we had our firstborn, our son. I became much more mindful of like just my future financially. And that's when I started learning about crypto. And I basically I went from like zero financial literacy. I mean, like, I think I was good at like managing like a checking savings account and being good about, not accruing like credit card debt, knowing how to like manage a budget. But like, I wish I had earlier on like gotten into understanding like money and finance. But that's why I love crypto so much. It like forced me to learn about it because there was the speculation that drew me in, the greed that drew me in. But then I came for the magic internet money, and I stayed for the tech, I guess, and I guess also for the upside as well. So yeah, no, I'd tell myself to get financially literate sooner and start learning. I think one other simple thing is you have to understand, I've always been like one for taking risk, but I did live with a lot of stress, especially like I would say high school and college. This sounds ridiculous, but like just being from like a very like middle class family, I knew that like I could never go home and like fail at any of this. Like I had to do well. I had to get a job. There was no safety net. Like mom and dad were very good to me and would always look out for me, but like there wasn't an option of like ever like coming home in my world. And so it's something that I wish I could go back. I really feel like I'm less stressed now in my 30s with two young kids than I was at 22. I was like really high strung because I was so worried about that future. And like the best thing you can do is keep trying new things, keep learning. Don't be afraid of failure. Some pretty like typical pieces of advice, but yeah, not overthinking your future, like really just reveling in the experience. Enjoy the ride because it goes very quickly.
That was some good dad advice right there.
Very dad advice.
Let me switch gears a bit. And if you weren't in crypto or tech, what would your professional career path be?
I thought a lot about this actually, because coming from tech into crypto, I actually think I ended up in just the place I should be. I think for years I thought about I should be in a type of selling or some sort of like marketing role. And investing is actually the best place for me to be because I'm kind of like selling opportunities and ideas to investors, but I'm also kind of like pitching and selling us to founders. And now as like an angel investor, I kind of, whether I'm an angel investor or whether we're investing through Fourth Revolution Capital, it's just the best of all worlds. Like you really get to, you get to ultimately, again, like invest in stories. I mean, that's what I feel like what I'm doing in this space. I'm looking for the most compelling story that happens to be backed by really strong product market fit. And
backed
so,
by
yeah,
ETH. I'm just kidding.
Yeah, backed by ETH. Yeah. So yeah, don't you guys feel like that a large portion of like what we do in this space in terms of, what is successful in crypto isn't always the best technology. I'd love for it to be. Like, I'd love to think that the best technology should always win out. But it's clearly a combination of technology and storytelling. And every so often that becomes perverse, and you have really crappy technology that gets oversold and overmarketed. But I think as a space, like we're pretty sharp. The crypto space keeps getting smarter and smarter and learning from our mistakes
and being more resilient.
And being more resilient. Yeah.
I would say like the tech and the tokenomics is the body. I would call it that. And the soul is the community. It's the storytelling. It's the intangible. And so the body, the tech is the tangible, the soul, the community, the storytelling. That is the intangible. And that's how I would compare it.
Well said.
And
said.
One final question from me. Who do you recommend as the next guest on Flywheel? Who do you want to see on the show?
Oh, I love what we discussed earlier about you already had F of X on because there were some really cool animations. I would love to see Prisma on because when we interviewed,
we promise. Yeah, we want them on.
That's an easy one. When we interviewed Prisma Finance, it was, I think, July, and this was long before the protocol had gone live or was just preparing to go live. There was no token. So much has happened since then, and there's just a lot to unpack with like the tokenomics, the way the token's being locked up, the incentive design, the lock drop through Convex. So yeah, I would love to see that. That's an easy one. I'd love to see Prisma Finance on, which I will help you connect with them after this. So
thank you, good sir.
That's perfect. Yeah, we'll talk about that after the show. But DeFiDad, thank you so much for coming on. One last thing, let everybody know your socials so they can follow you and everything that you're up to.
Yeah. If folks want to get in touch, they can DM me through Twitter. It's DeFi_dad. And then please also go to the link tree for the Edge podcast. It's edge_pod. Or you can go to DeFiDad.com. That'll redirect you to like all the different content links that I have, whether it's like YouTube or Lens and Twitter and so on. But Dave, Kit, thanks for having me on. This was really fun. I am more and more comfortable just asking questions on a podcast. So I appreciate you letting me ramble at you and keep up the great work. Like I said, I think there's we share in common this like desire to cover the indie rock bands of
the underground, the voice of the underground,
the voice of the underground. And I think it's necessary that we continue to look for those up and coming protocols so that next bull run, if we're in the bull run already, folks will be able to start learning about these protocols when they blow up. They'll be able to go back to these podcasts and
be like, hey, they covered them first. Up.
Yeah, exactly.
Well, DeFiDad, we'll let you go. We know that DeFi Santa is waiting. So thank you so much for coming on, and we hope to see you soon.
Thanks, guys.
Thanks. All right, everybody. That about wraps it up here for this episode of Flywheel. I'm your host, DeFiDave, here with Kapital K. We just finished up an episode with DeFiDad himself. Kit, what are your thoughts on this one?
I think we got a great conversation with one of the more curious minds of crypto. And in addition to that, we also got a sneak peek at what are the telltale signs of a bull, what is a bull market looks like. And it's, seems like it's kind of checking off the list here.
Stablecoin bottom, stablecoin bull market incoming.
Facts.
Yeah. That, stablecoins are really we love stablecoins here, and they're really like the bulwark, really such like a large part of what makes crypto markets run. And, sometimes they're taken for granted. But at the end of the day, everybody needs to go back to something. And I think DeFiDad recognizes that. And it comes to no surprise why he shares so much admiration for Frax and the core team.
Yeah, and I think you mentioned this in the intro, but like I liked how we were so focused on Frax in the beginning and really getting down to like, what could be improved, like what's better. And then we kind of took a really large step back to cover things from like, your obviously your other DeFi stuff, but also some infra stuff. So it's cool to see him expand as well, into other verticals, because he at one point mentioned his firm looks at 4 different verticals, right? Like
including AI.
And right. All the bio also. So I thought that was kind of interesting.
Yeah. A Da Vinci, a Renaissance man. A Renaissance man.
Renaissance dad.
A Renaissance dad. And make sure, you go follow DeFiDad if you don't, and make sure you go ahead and subscribe, hit that bell button to us on YouTube, leave us a comment, let us know what you think, give us a like, make sure you follow us on our socials at Flywheel DeFi on Telegram, Twitter, and TikTok. Make sure you subscribe to flywheeldefi.com. You can follow me on Twitter at DeFiDave22.
You can follow me at 0xcapital_K.
And we'll see you next week. Peace. Everything said on this episode is not financial or tax advice. This channel is strictly for educational purposes and is not an investment advice or solicitation to buy or sell any assets or to make any financial decisions. This video is not tax advice whatsoever. Please talk to your accountant and do your own research.